Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now just a general disclaimer, this video is only for education purpose. Consult your financial advisor before investing. Now let us get back to what we have discussed in our last video. In our last video we have been mentioning in fact in our last two videos we have been mentioning that markets have entered into the overbought territory. We might see some sort of profit booking at the higher levels. Some sort of consolidation could be seen at those particular levels. Some profit booking could be seen. Uh, so definitely market took a pause for a while, and again for 2 days it saw some sort of sharp correction, and then again it started its northward journey, making higher tops, higher bottoms. Now, last week after the FOMC meeting, we have seen that markets traded positively, and the global markets have taken a Fed chairman statement very positively, and it has moved in the upward trajectory. And you can see the US markets also have entered into the unchartable territory. That means they are also into the lifetime high. Again, Indian markets have also entered into the overbought territory, as well as it has entered into an unchartable territory. It is a new zone. So definitely the momentum is still positive. But again, I would like to highlight that since last 2 weeks, or to be precise, last 12 trading sessions, markets are trading into highly overbought region, and still, the indicators are into overbought region, and the market is scaling higher. So for the week, market opened on a positive note last week. For 2 days, it saw a sharp correction, and again it started rallying and ended on a positive note for the week. So now let us go to the Nifty daily charts, and we'll try to figure out what could be the trend for the next week, and how could market behave, or we'll try to analyze how the market could be seen in the next week. So let us go to the Nifty daily charts. So you can see this is the Nifty daily charts, and you can clearly see that Nifty has been moving into an upper region after this particular consolidation. Now this consolidation was a range bound move for at least for legs for a couple of days, and you can see that after the FOMC meeting, Nifty opened with a highly positive gap above the resistance trend line. You can see it traded very sharply on a positive note throughout the week for next 2 days. That means Thursday and Friday, and it ended on a positive note. Now here you can see RSI also. RSI has also entered into highly overbought region, but still it is in the with positive signals. So there are many optional cases, or uh, cases where the indicators are into overbought territory, but still markets are going higher. And this is the similar kind of situation which we have been witnessed since last couple of trading sessions. So again, the momentum of the market is still positive. Again, I would like to say that I am bullish, but cautiously bullish. Any dips from these levels might bring in strong buying support at the lower levels, and again market might start inching higher from these particular levels. But one needs to be cautious. If there are any kind of negative signals, then one needs to see to start booking profits. Now, how to identify that this could be a trend reversal, or this could be the short term top? So the only simple way which we can identify is that one should clearly watch for the Friday's low. Now, what is the Friday's low? Friday's low is around uh, 21,135 spot levels. Now, until and unless Nifty sustains above 21,135, then only we might see some sort of profit booking coming in from those particular level if Nifty closes below 21,135. Till then, if there is any kind of corrections, and that level is defended by the bulls, then again we will see the extension of rally from these levels. Currently, Nifty is has closed around 21,450 odd marks, and there are chances that Nifty might scale to the levels of 21,700 to 21,800 levels in the coming trading sessions. So again, I am cautiously bullish. So one needs to be nimble-footed, trade with strict stop losses. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 21,300 is the first support. Below that, the second support is placed at 21,182 is the second support. And below that, the third support is placed at 21,037. Whereas on the upside, the first resistance is placed at 21,600 is the first resistance. Above that, the second resistance is around 21,707 and third resistance is around 21,821. These are the crucial supports and resistance level in Nifty for the next week. Traders should try to follow or just watch out this level and trade accordingly in the direction of the primary trend. And the primary trend is bullish. So again, I would like to highlight that particular levels. Below that, one should try to get highly cautious or try to book profits. The levels is 21,135 on the Nifty spot. Till this level is defended, the trend would remain positive. So, friends, now let us discuss the derivative data of Nifty calls. You will see on the screen in Nifty calls, the action was seen in. Uh, you can clearly see the action was seen in 21,500 calls, 21,600 calls, 21,700 calls, and 21,800 calls. As discussed, looking at the technical patterns, 21,800 could act as a major resistance from these levels for next week. So at least on immediate basis, you can see that uh, the price volume action was positive on charts, and on derivative front also 21,500 could act as an immediate resistance. So if it closes above those levels, 21,500, then there are chances that Nifty might get the extension till 21,800 mark. So definitely here there is a rise in the open interest, rise in the volumes. The options premiums are also positive. That means there is no negativity. There are smart money are still not interested in writing the out of the money because looking at the data we feel that smart money has started pro- the short covering in the out of the money calls which they might have uh, uh, done writing in the past weeks. So definitely the data is positive. The implied volatility is between 11.11 to 11.57. So looking at this data, 21,500 could be the immediate barrier. And if it breaks, then there are chances that Nifty might see the extension of rally towards the level of 21,800 mark. So friends, now let us discuss the Nifty put data. In Nifty puts, you can clearly see the action was seen in uh, 21,300 puts, then 21,200 puts, 21,100 puts, and 21,000 puts. Now here you can see there has been a drop in the option premium. Implied volatility is slightly higher between 11.06 to 14.32. There has been a rise in the open interest, rise in the volumes, but drop in the option premium. That clearly indicates that smart money is writing the out of the money puts. So on immediate basis, the crucial support would be uh, maybe 21,300. You can see there has been a concentration of volume as well as the open interest. So on the downside, we feel that 21,300 would act as an immediate and strong support. If Nifty sees some sort of correction or some sort of cool off around 21,300, that should be the buying opportunity. And if it closes below those levels, then there are chances that Nifty might drift down or slip down towards the levels of 21,000 uh, mark, which is the psychological mark. So overall, you can see the charts are positive. The derivative data of the Nifty is also positive. So the momentum seems to be positive, and the undertone of the market is still positive. So now, friends, let us go to the Bank Nifty daily charts. On Bank Nifty daily charts, again, the chart seems to be positive, and you will see on the screen, Bank Nifty has seen a upward rising wedge breakout. Now you can clearly see that this particular wedge, after a long consolidation of maybe couple of trading sessions, and after the FOMC meeting and Fed chairman statement, Bank Nifty had also started rallying sharply, and it has closed above the rising wedge, and you can clearly see that the momentum is positive. Again, here I would like to highlight the RSI. You can clearly see the RSI is also into the overbought trajectory, and again I would like to highlight that there are rare chances that market remains in the over, I mean to say the indicators remains into over territory, but still markets goes or market still continues its upward journey, and this is the similar kind of situation which we have seen at this juncture. So definitely the momentum is positive, but again I would like to say I am cautiously bullish at these levels. So again the Friday's low would be the crucial level to be watch out for, and the Friday's low is around 47,632. So until and unless the Nifty trades above 47,100 odd mark, uh, the momentum of the market of Bank Nifty would remain positive, and again any dips should be used as a buying opportunity. So friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 47,755. Below that, the second support is placed at 47,447, and below that the third support is placed at 47,147. So these are the important supports level in Bank Nifty for the next week. Now on the upside, the first resistance is placed at 48,460. Yes, 48,460. Above that, the second resistance is placed at 48,702, and third resistance is placed at 49,189. So these are the crucial supports and resistance level in Bank Nifty for the next week. Traders should try to watch out this level and trade in the direction of the primary trend, and the primary trend is positive. uh, so now friends, let us discuss the derivative data of Bank Nifty calls. So in Bank Nifty calls, you will see on the screen the action was seen in 42,800 calls, sorry, 48,200 calls, then 48,500 calls, then 49,000 calls. Now here you can see there has been a rise in the open interest, rise in the volumes, and there has been a positive uh, change in the option premium. The implied volatility is trading between 9.95 to 11.94. It is in a comfort zone, and the option premium are also positive. That means the smart money is still not into writing the out of the money calls. So on immediate basis, 48,200 could act as an immediate resistance, and if it breaks, then Bank Nifty can rally towards the level of maybe 48,800 to 49,000. So definitely the momentum seems to be positive. One needs to be cautious at this level, but the view should be buy on dips at this juncture. Now, friends, let us discuss the Bank Nifty puts. You will see on the screen in Bank Nifty puts, the action was seen in 47,800 puts, then 47,500 puts, and 47,000 puts. Now, importantly, here you can see there has been a significant drop in option premiums. There has been a rise in the volumes, a rise in the open interest. The implied volatility is high between 13.69 and 15.16. It is slightly in the danger zone, but still, many times we have seen that even the implied volatility is danger zone in in Bank Nifty puts, market tends to go higher without any correction. But looking at the last two trading session, maybe next week we might see some sort of cool off or some sort of consolidation in Bank Nifty, but that consolidation should be used as a buying opportunity. Now here, on immediate basis, as I said, you can clearly see 47,800 could act as an immediate support. If it breaks, then only there are chances that Bank Nifty could slip down to the towards the level of 47,500 and maybe 47,200 marks. Now, one more important thing which I would like to highlight is FIIs are buying left, right, and center since last couple of trading sessions. On Friday also, the FIIs has bought worth 9,000 crores into cash segment. So this is clearly indicating that you know uh, the liquidity flow is into the markets, and that will drive the markets towards, or that will push the markets on the upside, at least maybe for maybe next couple of trading sessions. So definitely the undertone of the market is bullish, but I would like to say I am cautiously bullish. Any dips should be used as a buying opportunity. So friends, and now let us come to the final segment of our show, which is positional call. A positional call, I have identified one stock from the banking sector. The name of the stock is IDFC First Bank. Now you can clearly see IDFC First Bank has formed a triangular, symmetrical triangle formation, and it is on the verge of a breakout. Now the stock is currently quoting around 90 rupees. Since last couple of months, the stock has been into consolidation mode after a correction, and in that consolidation mode, it has formed a triangular pattern. So the stock is on the verge of a breakout. The momentum indicator RSI is also bullish or with a positive signal in the comfort zone. So definitely the stock can give decent return in short to medium term. So uh, swing traders, short-term investors, positional investors, and long-term investors can accumulate the stock on dips, or maybe in a range, can accumulate the stock in the range of 90 rupees and on dips to 87 rupees. The stock can test the level of 103 in short to medium term. So short to medium term could be maybe the investment horizon for next maybe 3 to 4 months or 2 to 3 months. But definitely the stock has potential to test its lifetime high or breach its lifetime high. So again, I would like to mention that long-term investors can watch out this stock in the range of 90 to 87 for an upside range of 103 in short to medium term. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you. And again, I would like to mention Merry Christmas to all the viewers. Thank you very much.